Folks, the second phase of rescue programs is beginning. Look what's happening in New York.
If you have medical bills piling up, there is help coming for hundreds of thousands of New Yorkers. Today, the city announced plans to relieve more than $2 billion of medical debt.
And we call it right here on this channel. We said they're going to have to come out with some massive rescue programs, debt forgiveness. I think the next things we're going to see are going to be more cancellations of rent, more eviction moratoriums, canceling people's mortgage payments or pausing these mortgage payments. I think student loan payments, about half the students right now can't even pay their student loan payments, and it was only re-implemented back in October. These levels of debt that people are carrying, it's not sustainable. And to avoid a massive default slash consumer bankruptcy tsunami, there's going to have to be a lot more rescue programs to come out, like the one we're seeing in New York, where it's $2 billion in medical debt being wiped out, and about 500,000 people in New York are needing this rescue. And New York's a very expensive city, so we're likely going to see this in other cities, San Francisco, Seattle. I think this is going to expand out to many other cities. And what will this do to the underlying cost of medical? Will it fix the problem? No, it's actually going to make medical prices go up even higher. You see, because if the medical companies know that the debt's just going to get discharged, they have no reason to lower their price, right? When people can't afford something, then there's an incentive for whoever's selling it or whoever's offering it to lower the price. When people know the debt's going to get discharged, they're just going to raise the price even more, because no one's going to hesitate about going further into debt if they know the debt's going to be discharged. Just think about it, common sense. Let's say that you knew that your mortgage was going to get erased. You would go out and get the biggest mortgage you could, right? Let's say that you knew in a couple years all car loans were going to be erased and forgiven. You would go out and you'd get the biggest, highest car loan you could possibly get and get the nicest car. Of course, anyone would if they knew that was happening. So this is the direction we're headed. We're headed to this massive debt forgiveness environment. And there's a lot of people out there that really take this to the extreme, and they say there's going to be a economic wide debt forgiveness in order to implement the next phase of our currency. Now, I think that's going to be a digital dollar. And then I think ultimately down the road, we're going to have to go back to hard assets, because we're going to see such a tsunami of economic depression slash Great Recession. So that's just what I see, just my forecast. I could be wrong, but I continue to stack precious metals just in case that happens. But first, it's going to be the completely digital dollar. I think it's going to be the next phase that'll come in as the quote unquote rescue plan to try to save people from this outrageous cost of living and get people from under this massive debt. Now, of course, that's not going to fix anything, because that's going to make the cost of living go up even higher, because it will make the issuance of debt or money creation even easier. So now, if that happens completely digital, you wouldn't even have to have paper bills. You would just have completely 100% digital. A lot of bad things go along with that, but just looking at it from a money creation standpoint, that would make the printing press go that much faster. And we already have so much debt now, where if you did have paper money to account for all this debt, you would go to the moon and back several times. What was it? A few weeks ago, we had a report laying out how much debt is out there. And if you stacked it in $1 bills, for every $4 trillion, you're basically going to the moon. If you stacked it literally to the moon, hundreds of thousands of miles. And 4 trillion rather to the moon, 4 trillion back, that's 8 trillion. We've got 4 trillion now, 34 plus now, 34 trillion plus national debt. So we're to the moon and back several times. If you look at unfunded liabilities, we're to the moon and back, who knows, hundreds of times. If you look at the global debt, the derivatives, we're in the hundreds of trillions of dollars, debt that can never be paid off. The system is insolvent. The banks loaning out the money, they're insolvent. They actually don't have the money. It's all digital. It's all fictitious characters on a screen. And, this is how the Ponzi scheme continues. And it goes on and on. They find new ways to kick the can down the road. The latest is just more debt forgiveness. But hey, most of you know this. Let's not be too repetitive here on these things. Let's get into some other news here. As most consumers are broke, living paycheck to paycheck, or on their way to becoming broke, we have Wall Street completely disconnected, detached from Main Street. Main Street being the U.S. consumer, people that work. Dow Jones up more than 100 points again, closing above 38,000 for the first time, a new all-time high. And I said right here there was going to be a massive, massive short squeeze, and that's just what's happening as far as I could see. And folks, this will not stop unless we get a big, big scare event where investors are so scared and so frightened. Just think 2020 2.0. It has to be something big and massive that's going to bring this down. Otherwise, the money's just going to continue to flow into the markets because a lot of people are making some good money on this, and they're mostly derived in the top 10%. When we know that the top 10% of the wealth now, or the top 10% of the wealthy, own about 92% of all stocks, right? So this is the game that's being run across the board now. But separate topic, but it's still economic. In-N-Out Burger in San Francisco, they're leaving town. Actually, I stand corrected. In-N-Out Burger in Oakland. Oakland. They came into Oakland and they're going right back out because of the crime. And this is just one of the symptoms of a outrageous cost of living is you get crime rising. It starts in the cities because of all the poverty and all the desperate people in these cities. Well, then you see it start going out into the suburbs and out into the country. Of course, there's a lot of poverty out in the country, but in the city is where the crime is the worst. And we're seeing restaurants close down in Oakland. So In-N-Out announces closure of Oakland restaurant, and it's just going to continue to get worse. Let's give you some good news here. Are we seeing anything become more affordable? Well, yes, electric vehicles. If you see our last report, they had a deep freeze, and especially in Illinois, they had basically a graveyard of people that could not charge their Teslas, and those owners were very upset and unhappy, of course. But look what's happening with the prices of Teslas. They maxed out just under $68,000. This is the average price. Some Teslas are even higher than this. Some are lower, but the average just under 68,000. Look, we've crashed all the way down to just under 36,000, folks. That's almost a 50% drop from the peak. So people say I never have good news. Here's some good news. If you've been waiting on the sidelines to buy an electric vehicle, I wouldn't recommend that, by the way, if you live in a cold region or a cold state. But if you live in a southern state or a warmer state, it might be a good time to get into an electric vehicle because gas prices haven't really come down that much. And, this is just a big, big crash. And there was such a big wave of buyers for electric vehicles, especially after 2020, when we saw the supply chain issues and fuel prices really surged. People freaked out because of the gas prices, and a lot of them went out and got the biggest loan possible. And now a lot of these people are underwater, not by a little bit. Imagine paying almost $70,000 for an electric vehicle, and now you can buy the same vehicle just less than 3 years later for 35,000. That's some depreciation slash deflation, folks. And I'm not sure what these people are going to do that are imagined being 10, 20, $30,000 underwater in a car loan. That's just not a good feeling. That's when you just want to turn in the keys, call the bank, say, hey, come and get the keys. I'm going to go drive a Kia or I'm going to drive a Hyundai instead of a Tesla. Maybe that's what a lot of people are saying. Here's another sign of the times, folks. Back to California here. We just talked about In-N-Out Burger. Into Oakland, out of Oakland, too much crime. San Francisco police recruitment drops 72%. Again, because all the crime. Who wants to be a police officer in one of these cities right now? With all the crazies, all the desperate people living on the street. 72% drop from 2019, despite being paid entry level rookie salary $112,000. Over six figures for a first year police officer, but yet recruitments are down 72%, $112,000. They still can barely get anybody to want to be a police officer in San Francisco. So sign of the times, you let me know, but to me it looks like inner city collapse, outer city suburb collapse, and it's just going to get worse, right? So continue to brace, keep stacking because ultimately we're going to go back to sound money. I continue to stack silver, my favorite investment to stack, but also look for investment opportunities. And that's what we talk about here in this channel. We try to find ways to make money on the way up, on the way down. If things crash, we're going to have cash to come in and buy at the bottom or close to the bottom or buy on the dip. And if we see the big scare event, like I think we're going to see here in 2024, have your cash ready because we're going to see 50, 60, 70% declines in the market if what I think is going to happen happens this year. A big blackout, black swan event. You'll see what it is. I can't really talk about it here too much on this platform, but you'll see what it is when it happens. It's going to be probably just as bad or worse than 2020. I'll take your ideas down below what you think it is. I think I know what it's going to be, but what do you think it's going to be? Because we've talked about it here in this channel before. So let me know what you think down in the comments. Do you have cash ready? Are you ready for the collapse, the crash, the scare event, the black swan? It's coming. But otherwise, in the meantime, make money either way, on the way up or down. Keep stacking, everybody. We'll talk soon. Bye now. Peace.